As a study, more a stairwell and a crowded place.
Yeah, with the
Welcome
like.
to the Daily Energy Markets Podcast. It is the last trading day of May. We have Brent crude oil essentially down this morning. Seems to have slightly moved off its barnacle on a rock, $65 a barrel, and now at 63.89. A little bit softer ending the week. Let's kick off this morning in the wild, in the normal part of the day as compared to those that are in some other strange part of the day, and Peter off the beach get to a little bit of that. Peter McGuire, CEO, Australia Trading.com, formerly XM. My question to you this morning, as I sort of bang my head on all of this, is has the oil markets priced in all of this sort of Trump tariff turmoil, sort of boomerang up today, not happening, is happening? Your thoughts, Peter, on the how much this market represents all the noise around it?
Well, good morning, Sean, and greetings from Sydney to everyone. Lovely to be here. I tell you what, I mean, in the last 24 hours, it was a no-go, and then there's going to be no tariffs, and everything's back to normal. And so I think that really put well, I'm not saying a cat amongst the pigeons with the market, but it certainly changed sentiment. And then that was overturned. So in turn, how does that play out now? Is there going to be further court cases? Does it go all the way to the Supreme Court? I think so. The unknown in that regard. If I look at Scott Bessent, the Treasury Secretary, he's saying that talks have stalled between President Trump and President Xi. What's happening with Ursula von der Leyen? Where does that roll? And to the likes of other major economies, Sean, the uncertainty rolling over into June and July, I think, is going to be very intriguing, to put it mildly. And what happens to certainly equity markets? We had a pullback as far as 10-year. You're now running at around about that 4.42. I thought, I wouldn't be surprised that it possibly goes back up to 4.5%. We understand, and that's in today's trading. We understand the positioning as far as President Trump not being able to sack Fed Chair Powell. We know he's got 1 year left, and what the Supreme Court came out and said it's a quasi-private entity, so he's not allowed to remove him. So I think the overall theme is going to be, I'm looking forward to the meeting tomorrow, but I feel as though the downdraft of energy prices could possibly play into June, and I wouldn't be surprised to see a little bit further softness.
Bill Spindle, senior global correspondent at Cipher News, all the way over on the other side of the world in Washington, D.C. Bill, does it really matter what happened last night? Are we in this infamous new acronym TACO? Trump always chickens out, so all the other noise is irrelevant because we all know at this stage that Trump doesn't have the stomach for really his own cliff edge semantics.
Yeah, I think it matters, and it doesn't. In the longer, overall, it's just added, as Peter said, it's added another layer of complexity and kind of increased the fog of uncertainty across all of this. And that's the same as we've got tariffs that are likely headed for well higher than historical levels, probably well lower than the levels that Trump has talked about, because that's all about negotiating leverage. But I think the real open question long term is this uncertainty some sort of temporary, even in a medium term, or really have we just kind of overlaid a layer of uncertainty across U.S. policymaking and U.S. trade really on a permanent basis, at least through the Trump administration, but probably well beyond that, given how complex some of these issues have now become institutionally.
Let's welcome Rosemary Griffin, OPEC Plus lead reporter at S&P Global Commodity Insights in the UK, to bring us some certainty, Rosemary, in all this sort of ocean of uncertainty. OPEC Plus due to meet over the weekend. We've had a few sort of preliminary meetings, and I suppose most accurate to say that the 8 countries that are participating in the 2.2 million barrel a day of extra cuts are the ones who are actually having a rendezvous tomorrow, and their decision as to whether to continue or not with their accelerated increase in supply is the decision on the table. Your thoughts for this meeting, what they're facing, what the likely outcome will be?
Yeah, so we're currently expecting that they will approve another 411,000 barrels a day quota hike for July. That would be the third month that they'd accelerated easing those cuts. The previous two surprise decisions they put down to healthy market fundamentals. But talking about July at this point in time seems, like a very foreign land, and anything could happen by then. I think though one of the things that we're tracking is that these decisions, these look like big numbers in the 400,000 barrels a day, but they also have the compensation cuts, and the April data that we saw didn't really confirm any increase. We had output flats last month, and that was a much smaller quota increase. So that could have played into the situation slightly. Also, the first month that they're easing those cuts. But if you look at the compensation plans, which all the countries have signed up to, apart from Algeria, which did not overproduce since this agreement came into force. If you look at those compensation plans, they're actually they total 455,000 barrels a day for July. So that's obviously above the accelerated hike level. Now, these compensation plans are a little old. The last ones that were published based on March data. We believe that updated.
I'm having whiplash here. March, July compensation. Let's deal with the immediate. Obviously, S&P Global Commodity Insights Platts is a secondary source for the OPEC data numbers. You mentioned there for April the data, which is also now a long time ago. What is your numbers for May? It is May 30th. I presume you guys work in some kind of real-time universe. What does the May data show? What are you going to tell OPEC your secondary source numbers look like?
Yes, we do. I mean, it's still a week before we publish our May survey, and
that's why I'm asking you. I want to get the scoop from the scoopers.
One of the things that we do notice tends to change a lot in the first week of the month is the tanker tracking data. But there have been a couple of things. There was a CPC outage, and one of the most interesting areas at the moment that we're looking at is Venezuela, which obviously does feed into their decisions. Is they're not one of the voluntary cutters. They don't even have a quota under the agreement, but that's one of the countries where we could start to see significant shifts. We had them steady for April, but obviously the sanctions pressure is really ramping up now. So yeah, Iraq, Kazakhstan are always interesting ones to watch. Last month for April, Kazakhstan had some maintenance, which helped it kind of cut production a little bit. But Tengiz is obviously a big project. It's added a lot of volume. So yeah, they're the things we're looking at. I'm sorry I can't give you the scoop, but looking forward to talking to you again when I may have some more numbers.
Peter, looking at the sort of the scale of things from an Asia perspective, we're seeing some stress in the, this, you mentioned the stress, what's coming into the bond markets. Currently, that seems to have moved from the sort of Treasury 30-year still there showing signs, but Japan in particular seems to be facing some bond market stress. In general, how is Asia adapting to the Trump shock and awe? Is the turbulence we're seeing in the Japanese bond market part of that? Is there other signs of it?
I think so, Sean, absolutely. I mean, if you're just looking first off, have a look at growth numbers and then have a look at CPI. Growth numbers are negative. CPI running at about 3.6% for Japan. So there's the first part that needs to be considered. So it's a classic.
That's stagflation, isn't it?
Exactly right. I was just about to say it. That is a classic example, and that's a textbook example. And it's going to be so hard to manage out. Also, you've got a 143 handle with the Japanese yen. You've got a descending US dollar, which is going to create, I think, even more concern. And should Fed Chair Powell have some form of rate cut decision over the summer period, then that's only going to soften, I think, US dollar, which in turn, one would think, would strengthen Japanese yen. Then the next part is what's going to happen as far as bond yields in Japan. They'll be, I think, kicked up again, and they're having troubles as far as auctions So they'll have to raise yield, and that'll be the similar case, I would think, again in US. So are we going to see a high, and the chances of Japan having a rate hike, Sean, I don't think they're totally off the market now. I can't see that happening, because how would you raise it considering where you are as a growth number? So they're in a real dilemma where they face themselves, and the only way they can get out, I think, is one would be have to be higher yield for their bonds.
Is this, Peter, is this directly correlated to the Trump tariffs on Japan and on Asia, or is this a trauma that Japan would be having anyway?
I think it's a trauma they'd be having anyway, but I think it's only exacerbated by the tariffs, Sean, and how that plays naturally with the likes of Japan and other major countries, being the likes of South Korea, being the industrialization of South Korea. Have a look where it's going to face as far as the Indonesian market, what happens as far as Philippines. Singapore, a different animal, I think, and Malaysia, they're only small economies in comparison. But yes, it's going to be very difficult for, I think, a lot of Asia over certainly in the next 6 months. A lot of uncertainty, and building on what Bill said, the uncertainty from one, the Trump administration, and secondly, what happens to bond yields.
Bill, on that point, sitting in Washington, are we through now? It's the Memorial Day weekend is behind us now. What is typically the beginning of the U.S. summer. Is the shock and awe first 100 days of the Trump, any new presidency, particularly this presidency, have we seen the high water mark, do you think, of the sort of shock and awe version of Trump 2.0? And now it's just the tremors playing out, and slowly but surely the markets are kind of betting that in, pricing that in. Where do you see shock and awe still? Summertime, politicians even like to go to the beach. Where's all this going, do you think, into the third quarter?
No, I don't think the shock and awe is really quite is going to end, really. We've seen the typical 100-day sprint to get as much done as possible. And that is kind of typical in the Washington framework. But we've also seen this administration push institutional boundaries way beyond what, have traditionally been. We're really into a whole different game here that's playing out on top of the typical game that's gone on. So now we're getting to this budget cycle. The House has passed this giant budget bill. The Senate's now got it. That's all sort of a normal, if difficult, and anxiety producing for the markets, as it always is. But I overlaid on top of that, we've really got big institutional questions that are playing out in trade, in defense, in the role of the president and the balance of powers between the governments. And I think you're going to continue seeing that play out with little bombs or maybe big bombs going off. Really, we've
seen that on that sort of that shock and awe, and just last night, obviously, which was of course a moment that punctuated the breadth, the bandwidth of the power of the president. And of course, if you don't challenge the president, they typically like to take more power than constitutionally permitted. And the president or the courts have been the sort of what appears to be the main check on the presidency. And again, last night, they checked him, and then another court unchecked him. We've seen the bond markets act as a check in early April when they freaked out on the back of the Liberation Day tariff levels. Are there any other sort of horses in the cavalry of checking Trump coming to the party here? Are the Democrats? Are there demonstrations of the streets? Is there a notable growing force of containment of this unbridled president that you're observing in the states on the ground?
Again, I think you're seeing the normal political cycle building, right? You've got midterm elections now really kind of sort of coming into view a year and a half away. And that's going to be in all the legislators' minds for sure, and the administration, to the extent that It's got very narrow margins in the House and even the Senate. So that's a kind of normal check that will start in. But again, he's pushing the institutional boundaries on all of these things. So it's not clear to what extent these normal political cycles are going to play out with this bigger thing that's going on with this challenging of institutional frameworks and the larger balance of powers. Which courts will have authority? Will they follow the Supreme Court only? Will they follow the lower courts? All these are really questions that just overlay this kind of fog of uncertainty that is really now kind of a permanent part of U.S. policy making and U.S. stance, both domestically and overseas.
Rosemary, seen as we established in your first comment that indeed S&P Global Commodity Insights will report again in May that the barrels that are being increased are much less than the quota changes, like you did in April, you'll probably do again in May. I'll make that assumption. But my question to you is, does S&P, does Platts, do you guys have a kind of a house view as to why these increases are happening in the window of what appears to be a weakening demand? Generally, the narrative is it's a little bit counterintuitive. You used the word surprise, I think, for the previous two increases. Why they're doing it, and then some sense of when they might stop doing it, if indeed it is a surprise.
I think there's a couple of reasons. One would be that, there's a kind of a weariness from implementing these cuts. OPEC Plus has obviously ceded quite a lot of market share to non-OPEC Plus countries over the last couple of years. So I think that that's one of the factors playing into it. Also a weariness with the overproducers. They've really, really struggled, particularly Iraq and Kazakhstan, to make their compensation cuts, or some months even to hit the targets. So I think that's definitely a factor. There's also been a lot of movements around the Trump-Saudi relationship, around the Trump-Russia relationship. And obviously Trump had a big trip to the Middle East recently. So whether there's an element of that factoring in, a move to align to some extent with Trump's ambition to push oil prices down.
Peter, I wanted to get a thought. I mean, one of the great proxies for the health of the Chinese economy and hence demand for oil, China still the world's biggest oil importer, and reading the tea leaves on how well that economy is or is not doing now as we approach the mid-year mark, it seems performing better than the narrative has been early in the year, at least, that China is in a relatively weak place. But how is Australia, being the big provider of raw commodities to China, are we any signals there as to the health or not of the Chinese economy?
From an Australian viewpoint, Sean, I mean, it's still that overall insatiable appetite that we keep on feeding from an oil perspective and for other industrial metals. If you run it across to meat, livestock, seafood, wine, and assortment of other commodities, yes, we've only got 26 million people in there. I think they've got more people in Shanghai. So, the overall consumption and an appetite for our products are just extraordinary. So they're our number one trading partner, and I don't see that fading away anytime really soon. So there's the first part of it. The second part is, how's China doing internally? We all understand from a property market, the overhang hasn't gone away, and who's holding that debt? We say that each and every time, and whether that's going to unpack or again, it's an unknown. But I think where China plays, and if you're looking at their market, it's at 3,850, that CSI 300, well up from that 3,100 handle. And there's obviously an appetite for Chinese stock. Investor confidence and overall momentum has been relatively strong. So again, what happens as far as my understanding with Scott Bessent, Treasury Secretary? He's saying that the negotiations between President Xi and President Trump are at a bit of a stalemate at the moment. And do we see something happen
Do you see?
within the
Do you
next
see
couple of
any?
weeks.
Any? Do you? I mean, Trump wants to meet everybody, of course, loves the photo op and so on. But of course, the Chinese leader is much more cautious. Do you see any upside for Xi to actually sit with Trump and give him his photo op that he wants? Is there any sort of? How do you see that moving forward in terms of
Yes, I
this
do. I think
greater
that that's
face-off?
how it's. I think at the moment, Sean, there's got to be. I mean, we understand where Scott Bessent and his team were only a couple of weeks ago in Switzerland with the Chinese, and I feel as though that the big end of town, in the sense of President Xi and President Trump, will have to meet together. I don't know where that meeting would take place, but they need to, try and get some traction on this because time is ticking away, and I feel as though that it's going to be an aggressive stance from President Trump to get a deal done. And the longer that it drags out, I think the more impatient he will become.
Let's go to the survey question, which is touching on a little bit of some of our earlier comments. Oil markets have priced in and now more or less immune to Trump tariff turmoil. Agree or disagree? Agree or disagree? Bill, looking at the sort of wider picture of one of the elements there, obviously talking with Peter about the China demand story looks pretty solid still. What about the U.S. energy production story, U.S. oil production? It's surprisingly Trump, I don't know, is it a surprise? I would think it must be to the sort of Houston and oil and gas industry. Trump hasn't been much of a friend to them since he's come into power. Is that a fair assessment? Is there anything there likely to change the outlook for U.S. oil and gas production?
Yeah, on a lot of specific things, they have run into some difficulties, let's say, and there has been a lot of talk, particularly in the shale patch, about sort of to what extent, how much longer is there, growth in shale production. That does seem to be peaking. Oil prices, you wonder to what extent, as always with Trump, is he playing the fabled three-dimensional chess? Is he trying to probably be happy to see prices keep prices lower through the 4th of July driving weekend when a lot of Americans are really paying attention to gas prices. After that, maybe he cares a little bit less. It's a little hard to tell. But yeah, broadly, I think the oil industry and the gas industry is more frustrated than they thought they'd be with him. I'm not sure that means they've by any means abandoned him.
What about the bill on the IRA side, on the energy transition side? Similarly, Drill Bailey Drill, Trump promised that he was going to be, incredibly generous to the oil and gas industry, and he was going to sort of kill the energy transition story. He hasn't delivered on the oil and gas side. Has he delivered on his promise to kill the IRA and the energy transition bill that was delivered by Biden? Signature of the Biden administration in many ways.
Yeah, mostly, I think, to the extent that the federal government controls a lot of those subsidies and a lot of the provisions in the IRA. Yes, he's done a lot of damage to that. That said, it's not often not quite as horrible as some had worried it will be. You kind of start with the baseline. Yes, it's bad if you were really hoping for an energy transition quickly and accelerating in the U.S. But on the other hand,
did much of it get locked in already? Did the Biden administration manage to sort of ring fence any of it?
A bit, but not as much as I think many people had hoped. I think you'll really see that as we get to the Senate, where you would possibly see, I mean, there definitely are senators, and as there were in the House, representatives that wanted to keep many of the local provisions of those that helped mostly red states and mostly swingy type districts. They would like to keep a lot of that stuff, but when push came to shove in the House, most of that stuff was thrown overboard. And I suspect you'll see it happen in the Senate as well, simply because the Republicans have no choice but to pass some sort of a budget bill that extends these tax increases or tax decreases, which therefore means they've got to keep a lot of these they've got to get money from somewhere, and it's going to come from most of these programs. But you do see some things that are moving along. You saw a big wind project that Trump tried to kill in New York now seems to be back underway, interestingly, with some sort of a behind the scenes deal about an oil or a gas pipeline that would run through the Northeast. So you do see a little compromise, and that's, I think, the big question going forward. Do we see a kind of permitting compromise that comes to be that allows a lot of transmission, a lot of things the renewable energy industry needs to build on the grid, as well as the gas industry, combined with other things that allow gas pipelines to go forward, a kind of a truce that goes, and we'll see whether that comes together as part of the budget deal. Probably not. Maybe some sort of bipartisan effort beyond that.
Rosemary, just looking at the OPEC plus picture and inevitably members beyond OPEC plus, and most notably Iran, Libya, Venezuela, which all have the potential to produce a lot of oil and export a lot of oil, and have been curtailed by multiple sanctions and war, etc. Where are they looking at the moment? You mentioned Venezuela in your earlier comment, and yet we saw some reprieve for Chevron to hold on to some element of its production there. Trump, again, in the TACO thing, seemed to step back from totally crucifying Chevron's opportunity there. How does S&P see the outlook for those three producers adding to this extra supply increase that's coming from the OPEC plus?
Yeah, it's a really interesting one. I mean, we did see some issues in Libya yesterday. Libya's maybe been one of the more volatile producers over the last few years. It's hard to say really how much of an effect that will have. But the last shutdown there late last year cut output by almost 600,000 barrels a day. So that just kind of shows the extent to which Libya can have an impact. In terms of Iran, I think it's interesting because obviously there's been such harsh rhetoric about Iran. You know, we really could see incredibly punishing sanctions coming in later this year. But in the meantime, until, you know, we really do see that big shock, they're kind of incrementally increasing production, you know, 10,000 barrels here or there. We had another update yesterday. They've just, you know, insisted on some of the main subsidiaries of NIOC submitting plans for production over the next year. So yeah, if that shock doesn't come, then, you know, we will likely continue to see incremental increases in Iran. So yeah, I mean, everything combined, that could really have a big and unexpected impact on OPEC plus supply, which obviously the voluntary producers and the other producers with quotas will have to deal with.
But yet oil prices are holding. What's your kind of house view as to why oil prices are stuck in around 65, which all in all is probably a pretty decent price when you're accelerating supply into a weak demand market? What's the thinking within S&P as to why that's holding?
So to some extent, it's you know, we're coming into the summer season, so to some extent, it's that kind of demand, and we see that season masking some of the impact of the production increases by OPEC plus. But we do really see the price deteriorating by the end of the year and perhaps falling below $50 a barrel, which would have major implications, not just within OPEC.
Sorry, did you say 50 or 60?
Below 50.
On Brent.
Mm-hmm.
Wow, that's a big number. Peter, we talk a lot about China all the time. I wanted to get your thoughts about the other Asian countries. I'm just the sense that we're now, you know, 2 months into, or 60 days there or thereabouts, 2/3 of the way into this 90-day pause on reciprocal tariffs. That, you know, the countries like Vietnam and others are, you know, facing severe tariff numbers. I think 40 to 50% or some big number, particularly Vietnam and others. So there's still a looming guillotine about to fall if nothing changes. Where are those countries? Are they quietly sending armies of trade negotiators to Washington that we're not hearing about? Or where is that all playing out, do you think?
Well, Sean, I feel as though the undercurrent, there's certainly concern on their own main street. So how do they action that? And I would be very surprised if they didn't have people at least discussing it with the likes of Scott Bessent's underlings and in turn trying to massage a deal forward. The way
I mean,
to
we're
see it,
increasingly hearing that Besant and the U.S. administration is just simply going to fax through, this is your new number. Don't bother sending a trade negotiation team.
well, I mean, it could well be dependent upon, I think, as you know, as Trump's sons keep on saying, the time to deal is deal quickly, because they feel as though that they've seen this play out many times over their own lifetime, and you've got to get in quick. And the quicker you get in and you put together a deal, cobble it together in some fashion, then it's going to have far more opportunity or chance to be accepted by the US administration versus playing a long game, and in turn your 30 or 40% could turn into 60%. So these are the unknowns that are going to be massaged through, and I think everyone would be very aggressive in trying to put together a deal.
Well, I think it's all a bit tackle myself, and that's where I think the trade tariffs are ending up. 55% agree that more or less the oil markets have priced in, and 45% not. That always makes me feel good. That's a good question, Sean. You get to have a beer on the weekend. That's whenever the answer is close. But we'll have to see where all of this goes. After the weekend, we'll have a greater sense of OPEC Plus's decision. And with expectation, of course, the accelerated increase continues at least for another month. And then we will eventually get those very prized secret numbers that Rosemary is protecting very tightly as to the secondary sources. The noises I heard at the MPGC conference in Bahrain this week was that again, the quota number change is going to sound a lot more than the actual barrels supply change is still quite low, and ultimately that's why oil prices are holding nearer 65 than 55 for now. Bill Spindle up all night in the great world's Roman capital of Washington, D.C. Thank you very, very much. Rosemary Griffin in the very early morning of London, enjoying a good start to her day. All her bosses will be very happy she's up this early. Peter McGuire in Australia, get back to the beach, beware of the sharks, and we'll talk to you all soon again. Have a great weekend, everybody. All the best.
Thank you, Sean. Bye, Rosemary.
Cheers, guys. Thank you.
Bye.